we also have with us Vaibhav Sanghavi. Vaibhav, with regard to the Nifty today and with regard to markets, do you believe that this is an opportunity or it's the dip that you've been waiting for?
No, see, I think very clearly we need to understand why, first of all, this is kind of happening. One is a clear sight of some amount of funds getting shifted from India to China, purely because on the back of China's stimulus and the increase in weight post this rally which has happened in China market, foreign investors are kind of catching up with the gap, which in a way, the weights of emerging markets or weight of India and China in emerging markets were close to about, say, at par at about 21%. And now it's the gap has kind of expanded. So the investors are catching up to that weight, a little aggressively. So while they were underweight, so some amount of shift, which is evident and which is evident from the FI flows for the last 2 days as well. And secondly, basically from a fundamental perspective, I think the earnings for the quarter are likely to be marginally weaker than expected. If you ask me for the view perspective, I think these things or probably consolidation in markets are always welcome. There is never a good sign that markets keep on going one way. A good correction can kind of give you incremental opportunities to probably go and get a better price for investing for a long term. So I would probably view that as positive.
Vaibhav, hi, Tamanna here. If we need to look at what is really spooking markets, would you say the biggest factor is geopolitical and what's happening globally? Is that the biggest concern? Or is the kind of impact which we're waiting to see on the derivative side also adding to the bearish sentiment? What would you say is the number one factor? Important to understand that to see how quickly we'll see a reversal.
No, if you ask me, it is a point where it is a culmination of all of these factors. Of course, geopolitics is not something which is looking good. And potentially, if there is any further action, you may see some amount of reaction into the subsequent oil prices as well. While we are also seeing some amount of China stimulus which has been announced and some amount of flows shifting because of that, I think a lot of factors, including our derivative kind of measures, which I would argue in favor of it, that it is the right thing to do. I think all of these things have come simultaneously and which is kind of giving some amount of impact on the market. Now, whether do I think that whether this is all about it and kind of it is going to stabilize? At the end of it, the markets will, over a period of time, a medium term to long term, will follow the earnings momentum and the earnings growth. At this point in time, I do see some amount of pressure coming on the earnings growth purely because good amount of Nifty earnings is dependent upon directly or indirectly on the global kind of economic situation as well, because it depends on the exports. So all in all, I do see some amount of moderation in terms of the earnings and resultant to that, some amount of moderation into expected rate of return from equities as an asset class.
Vaibhav, which pockets do you think could be the worst hit from the earnings perspective? Just taking forward your commentary right now, where do you see the weakest links?
See, I think if you see from the last 2 to 3 years, the biggest contributor to the earnings growth has been banking and financials along with commodities like metals and mining. My sense is basically if the global economy is going to slow, then metals and mining earnings are likely to be under some amount of pressure. Along with banking, which is where I do think that we've seen the best of the story play out in terms of better interest margins, best kind of credit growth and asset quality, all in combined has given some good leeway into the earnings. My sense is basically at the margin, all of these things will start to deteriorate. And in that effect, I think we will see margins kind of likely to get downgraded. The only pocket where we do see some amount of revival likely to happen, not immediately, but in few quarters, is probably the consumption basket. And that's something to look out for.
Consumption basket also looking positive, you would say, because of rural recovery? Till 2 weeks ago, Vaibhav, my question basically is rural recovery was the theme. Now, after the September auto numbers, one is not so sure. What we've heard from Dabur has made us a little unsure as well. Do you think that the rural recovery theme is something that is yet to unfold?
Absolutely, which is why I say a couple of quarters down the line is one, because we've seen the commentary coming, from the larger companies, from the companies in terms of the state of sales, especially on the consumption side. But what I do see a clear difference between the earlier policy kind of framework to now is that there is some amount of shift towards consumption or consumption-related, kind of expenditures, by the government. As against, which was solely focused on the supply side. So my sense is basically, I think we will see that shift kind of happen, and as disposable income or probably income kind of, goes higher because of good monsoons, which has happened on an overall basis, consumption will likely revive from here onward. Of course, it will be selective in the initial piece, but on a broader scale, I think we will catch up some momentum probably 2 quarters down the line.
Vaibhav, just curious to know your view on realty as a pack, because it's done so well over the last couple of years, but 4% plus lower. Just trying to understand whether you're constructive. How do you view it?
See, real estate has been a fantastic beneficiary post the COVID period. Wherein the want of bigger homes has kind of led to some good pent-up demand and subsequent real estate sales. Also with the support from the government in terms of the better stamp duty as well. Now as things stand, there are two things that have happened. One, in the previous budget, the change in terms of the real estate taxation, for the second home and third home and onwards. And two, in terms of the cost of transaction from a real estate perspective. Now, if you see from a real estate transaction perspective, if you see GST plus your stamp duty plus your registration, it kind of goes to about 10 to 12%. Now, combining all of these plotting it, in terms of the return expectation, I think they have to be moderated. Unless it is for personal use, that's a different matter. But for personal use properties, my sense is basically I think that pent-up demand, which we saw in the few years earlier, I think has played out. Incrementally, I do see more of demand coming from the investor community, and which is where I do think that we are probably likely towards the peak in terms of the real estate cycle. I'm not saying that the prices will drop. It's just that probably the appreciation of prices from here onwards may not kind of happen, which is where real estate stocks probably need to have a check in terms of where the valuations are, in terms of the inherent NAV and what times they do trade as well.
Okay, so reality check for realty as well. Thank you so much, Vaibhav Sanghavi, for speaking with us.